We're calling it an emergency roundtable after Saturday's roundtable event, first Saturday roundtable event. Um, and we've got some great guys, Nate, Kane, Chris, and Jeff and Lance should all be hopping on for a bit. Everybody's got, of course, a chaotic schedule, and this was last minute, so people may have to jump in and out a bit, but we're doing our best to get as much value to you as possible. So welcome in. Uh, my name's Stephen Ground. For those that don't know me, I am happy to be here with you, and I am going to run through a little bit of what we're talking about today if I can. I don't know why that is so huge, so let me adjust that a bit if my computer will cooperate, which right now it doesn't want to. Nothing wants to cooperate today, huh? There we go. All right, so yeah, like I said, we're hosting and kicking off an emergency roundtable today at 3 p.m. We're going to have Lance, Nate, Kane, Chris, and Jeff dropping in. Like I said, their schedules will, may force them to jump out at different points, but we are doing our best to bring a lot of value to you. We're calling this kind of last minute. Our goal is to help you understand today's absolutely chaotic market and maybe even come up with some real-time trade ideas to share with you. I'm Stephen Ground. I'm the editor-in-chief at Prosperity Pub. If you haven't met me before, great to meet you. Very nice to have you here. Some of you were with me as recently as Saturday with Tom, Kane, and Jack when we talked about Liberation Day and the tariffs and the two worst days in market memory and all of that stuff. If you were there, I told you we'd be watching the markets closely and potentially calling for more last minute pop-up roundtables if the chaos continued. And unfortunately, here we are. If you were there on Saturday, I'd love to hear from you in the chat. Say hello. Let us know if those roundtables, if these sessions are helpful for you. I'd love to hear what you took away from it and just be able to say hi to all of you and thank you for being there. Babette says hi. Welcome in, Babette. Glad you are here. But yeah, we hosted through that Saturday. I'd encourage you after we're done today to go back to that on YouTube. There's a ton of kind of timeless, evergreen advice in there for trading in market conditions like this, crashes like this. The markets are moving very quickly, but that doesn't necessarily mean that the advice changes. A lot of the wisdom is going to stay the same. Don't panic, control your emotions, shorten your time in trades, those sorts of things, protect your accounts. We'll talk about a lot of that today in a little bit. Now, you probably don't need me to tell you this, but today's markets are some of the most chaotic in recent memory. Here are just a sampling. There were about 1,000 tweets I could have pulled from, but Kobasi letter saying we're currently witnessing one of the craziest days in stock market history. April 7th, 2025 will be a date referenced for year to come. Brian Rose said today was one of the craziest days in market history. We just watched 3 trillion get added to the S&P in under 10 minutes, and then nearly 2.5 trillion of that was erased just as fast by a single unverified rumor of a 90-day tariff pause. And this guy, Nick, said might be the craziest 30-minute span I've seen in the markets, which I'm sure a lot of you resonate with. Just take a look at the 5-minute chart from 3 p.m. on Friday to 1 p.m. today when I pulled this and prepared these slides. You saw the uncertain close on Friday. We tried to push higher and failed on Friday at the close and ended up going a little lower. And then this huge gap down that first kind of signaled in the aftermarket or in the pre-market session Sunday night. We saw the markets head way lower and started to talk about maybe doing one of these emergency sessions because it looked like we could be entering a real serious long-term permanent bear market crash kind of scenario. At least that was the fear that everyone had. But then around about 10 a.m., this rumor that they mentioned earlier circulated that there was going to be a 90-day tariff pause, something that Bill Ackman had called for, as we'll talk about here in a minute. And as that tweet said, the markets and the S&P added about $3 trillion back in over the course of half an hour or so. And then that quickly died off after about 20 minutes, and we didn't quite get down to the lows we'd had before, but we evened out and killed most of that big jump higher, and it was sideways to down chop ever since. As we sit here right now, let me get an update. The S&P is back to very slightly positive. The Dow is slightly down, and the Nasdaq is almost 1% positive, and we've got an hour to go before the close. So even this chart is already outdated, as I knew it would be when I pulled it, but hey, I've got to pull the slides sometime. Here's another version of that same chart from Kovesi Letter. You can see the CNBC report here. The S&P added 3 trillion from the low of the day, and then the CNBC reported that it was that the White House was unaware of the pause, and we saw this sell-off happen. But now the markets are starting to seesaw back the other direction. It'd be an impossible task to cover all the tariff chaos that's fueled this uncertainty over the last few days, but I'll try to give a brief rundown for anyone who isn't up to date. On Wednesday, President Trump announced his sweeping tariff policies on what he called Liberation Day. The markets reacted swiftly and violently. Just some of the headlines we saw on Thursday and Friday. JP Morgan upped its likelihood for a recession to 60%. The NASDAQ 100 officially entered bear market territory on Friday, and we crossed $10 trillion erased from the stock market since Trump's inauguration in January. And then it became the first time in history the Dow Jones dropped more than 1,500 points on back-to-back days. Of course, that's a little bit misleading because the Dow Jones has been growing a lot. So the 1,500 represents a smaller percentage drop, but still, that's not a good sign. And we got to the weekend, hopefully offered a chance at reprieve, but the Trump administration dug its heels in. When asked how much pain Trump could tolerate in the market, the president called the question, quote, so stupid, then added, I don't want anything to go down, but sometimes you have to take medicine to fix something, which, implied that he was very willing to tolerate a sick market to see the long-term goals of his tariff policies enacted. Then he also added this on Twitter, saying oil prices are down, interest rates down, and urging the Fed to cut rates, food prices down. There's no inflation, a lot of positive thing. I'm not going to read this whole wall of text, but he says, make America great again. And then he says, the US has a chance to do something that should have been done decades ago. Don't be weak. Don't be stupid. Don't be a panickin', a new party based on weak and stupid people. Be strong, courageous, and patient, and greatness will be the result. So the signature flair that only President Trump can add to a tweet there, but basically once again reinforcing that he's in this for the long haul. So as it becomes clear that the president and his administration are committed to tariffs, regardless of the immediate effects, he's started to lose allies. Bill Ackman, who was a very vocal supporter of Trump during the campaign, begged him over the weekend to call a pause on tariffs and forestall what he called economic nuclear winter. And we even saw Elon Musk of Doge and Tesla fame take aim at the tariffs and specifically, not so subtly, criticize senior counselor for trade manufacturing Peter Navarro, who many of you know is one of the, maybe probably the driving force behind tariff policy, and some now deleted tweets criticizing economists from Harvard, which is where Navarro's background comes from, etc. Most worryingly, perhaps China escalated the next stage of what could become a nasty and unrelenting trade war between the world's top 2 economies. But there have been some positive signs as well. More than 50 countries are seeking some kind of trade negotiation with the Trump administration, including Japan, Israel. I believe Benjamin Netanyahu is in the US today, and I'm sure this will be a topic of conversation. Vietnam as well. Even the EU president, Ursula von der Leyen, has floated a zero for zero tariff deal to the US. So the question becomes, will the Trump administration negotiate and create a better and freer world of global trade, turning, 3 or 4 or 5 or 6, however many days of tariff chaos we eventually have, into a potential long-term good? Or are they really committed to tariffs as a good in themselves and potentially sparking a long-term crash in the global economy as we go through basically a hard reset of, 50 plus years of free trade policy? Unfortunately, and very unfortunately for the markets, we're getting mixed signals from the administration every day and every hour, it seems like, on that very question, which is part of the reason the reaction has been so drastic and immediate. And that's why I've called this roundtable today, right? We want to get a lot of people here to give you their best advice on what to do next. We can't answer what the Trump administration is going to do. Wish we could, but we do have experts who have been through market crashes before, and they're here to answer your questions, share their experience, and even help you navigate through the close today live on camera, sharing what they are doing with their own real money in real time right now. So let's talk about who is going to be joining us. We have Lance Ippolito. He's a senior options strategist for the Trading Pub. Easy for me to say. He's traded a $30 million account for a private hedge fund in Florida, mastermind trader who has revolutionized the use of institutional order flow. So he's going to be able to tell us what some of the big money is doing right now as we go towards the close. And he's developed some of the best trading software and tools out there, including the Master Indicator, News Flow Scanner, and Penny Options Scanner. I know we have a lot of folks who know and love Lance here. We also have Kane Shea, who's been a regular guest on these roundtables and is coming back from Saturday's first Saturday. So we really appreciate Kane and all the time he's committed to doing these, and he's been awesome on every one of them. So you're going to love what he has to share. He is a former PIMCO VP portfolio manager, which means he helped manage $1.7 trillion in assets, including for companies like Disney, Apple, Google, and more. He traded $200 billion of daily volume on average and has traded in the past with legends like Bond King Bill Gross and Allianz Chief Economic Advisor Mohamed El-Erian. He cut his teeth trading during the 2007-2008 financial crisis, trading the exact products that got hit worst at the time: CMBS, CDX, CDS, those kinds of things. And he shared a lot of that wisdom on Saturday. I'm sure you're going to get some of that again today. It's going to be super valuable. Jeff Smith has not been on a roundtable with me yet, I don't believe, and I'm very excited. He's the CEO and head educator at DTI, where he's traded for 24 years. He's a former oil and natural gas pipeline engineer. He's a leading expert on commodities like oil, gold, silver, and more, and especially valuable, I think, for today's session. He's an expert trader in the futures and overnight market. So we're going to get some unique insights maybe on what to look for even after the close today. And, he'll tell us about what the overseas markets are saying as well. I know the Nikkei has been hammered today, or at least was being last time I checked. Jeff's traded during the dot-com crash, the 2008 financial crisis, COVID, and more. And so has Chris Pulver, who's spent over 20 years in the market as a trader, former money manager and teacher. He's an options chain analyst and derivative specialist. He's an expert on zero DTE option setups, which can be super valuable on days like today, or just any setup where the markets are whipsawing back and forth to get in and out of trade positions very quickly. He personally manages multiple million-dollar trading accounts, and he's diversified. He's a diversified portfolio trader who's maintained year-over-year profitability from 2001 to 2004. Last but not least, Nate Tucci, over a decade of experience trading everything from Forex to stocks to crypto and, of course, options. He's worked with dozens of the world's leading experts, helping them refine and develop strategies. He grew his own investment and dividend portfolio by over $100,000 in 2024. And he predicted a 2024 market melt up and a post-inauguration collapse all the way back in 2023. So he saw a lot of this coming, and hopefully he's going to tell us what's coming next or what we can expect, what might happen. Now, this week has not been fun. The S&P 500 officially became a bear market earlier today, although it may not be now that it's rallying. Although, as I look again, it's going back towards break even for the day. And it had its worst three-day performance for the S&P 500 since October 1987. Again, this is earlier in the day when it was lower than it currently is. BlackRock CEO Larry Fink says we probably already are in a recession, and he wouldn't rule out another 20% market decline. Now, my goal is not to scare anyone. I think, that's kind of taking care of itself today. You can find bad headlines anywhere, and it's easy to get overwhelmed, but the worst thing that you can do right now is panic. And that's why we brought together this team of experts to help you through it. So let's hear from you in the chat. Let us get to know you, your name, where you're coming from, and how you're feeling right now. What's going on? How are your accounts looking? Anything you want to share? And then most importantly, start sending your questions for our experts. We're leaving a lot of time today after the close to talk about Q&A, get our experts to weigh in. We're officially kicking off at 3 p.m. Eastern. but Deanna and I are already here helping you get ready. So welcome to this emergency tariff roundtable. We are so glad that you are here. Don't exit the browser because seats will be limited today. We do have a Zoom room with a ceiling on its capacity, and we're expecting a lot of folks here today. So make sure you stick around and just save your seat, even if you need to pop back in at 3 p.m. When we get started. All right, some notes already in the chat. Ellen says, hello, Pete from the Netherlands. Pete, I think you're at every single webinar I attend. So thank you for being here. And also let me know if I'm saying your name correctly because I could be butchering it. And if so, I apologize. Joanne says, really appreciate the weekend emergency session. It was very valuable. Thank you so much, Joanne. We'll post that replay link for anyone when we're done here today to give you a chance to go back and watch that. Fred said it was a good session with good advice. Bob says, can we email the recording? We will definitely email out the recording of this, although we encourage you to stick around and ask questions live. Lana is asking if it's just an oversold market correction. We're going to find out what our experts think. It's a little bit hard to tell right now. There's definitely some argument for that, that this was a well-needed flush of the markets, and maybe even as soon as today, now we're seeing a little bit of stabilization. But it's just hard to tell, and there's so much uncertainty right now that you don't want to lean too hard into any prediction, right? You want to react and be smart about it, and control your trade size, your risk, and all that. Joy says hello from California. Thomas from Hemet, California, which I also may have pronounced wrong. Andy in Wisconsin says he's losing on stocks but doing well with options. That's good. I mean, that you definitely, it's going to be hard to be winning on stocks right now, right? And if you have long-term buy and hold on some of that stuff, you just have to kind of stick with it and hold on. But if you're winning on options and offsetting some of that, it's not as bad as it could be. Diane from Fair Oaks, California, near Sacramento. Pete says he's confused. I understand that. Greg from Arlington, Texas. Terry, hello. Welcome in. Matt says he had a big loss and too worried. Yeah, we understand that, Matt. And I hope I think you're in the right place to get some answers from, what to do next. And we'll talk about that with our experts today. Stephen, great name, says he's from near Seattle. Welcome in. Stuart checking in from Saudi Arabia. So welcome in, Stuart. I'm sure it is late over there. I think Deanna just shared the YouTube link if anyone needs it. Pete says he can learn a lot from the gurus, and you're here, like I said, every session. So, you know, I hope you are, and must be paying off if you keep coming back. John says greetings from the UK. He says he's long gold and sticking with it. That's been a smart investment lately. Brian says it's short-term pain for long-term gain. Trump's assembled a bunch of exceptional businessmen, and he has confidence in what they're doing. Good to hear that, Brian. I think some folks agree with you. Some folks maybe not so much in the short term, but we'll see. Darcy says, please send the recording. We will do that. Greg from Santa Barbara, Gregory from New York. So welcome in to everyone who is here. It's 2:51 p.m. So we've got 9 minutes left to go, but you can start to ask your questions now, and Deanna and I will check the chat and make sure we stay on top of that. I'm just looking at the markets again. It looks like the S&P 500 is almost exactly break even now. The NASDAQ has sunk back down from a little rally. Even gold is down fairly significantly today. Crude oil is way down, which is not necessarily a good sign overall, but obviously will help at the pumps a little bit, you'd hope. But it's way down from its recent highs and sinking fast. So a lot's going on. I'm glad we have Jeff here, especially to talk about that and oil prices and what they mean, the good and the bad and the ugly of it, because there's a lot of questions there too, as well as with gold. Let me answer a question here from our group chat, make sure we've got everybody set up. Hold on 1 second as I type away. All right. So how is everyone feeling? That's kind of my big question. I know everybody's probably worried, nervous, scared, but it seems like more folks in the chat maybe think this is shorter term, not the end of the world. Something that we can get through. I think a lot of our experts feel similarly. Certainly no one on Saturday was doom and gloom. This is the end of the world. There is and has been a lot of opportunity. You just have to know where to look for it and find it, which is a lot of what we're going to talk about today. And we are going to be able to dig into the markets a little bit before the close, so that we can, see what's going on in real time, maybe even find an opportunity or two. So we will be doing that in just a little bit. This session, Diane, is going to last a little over an hour, probably. We're going to go all the way to the close, and then we're going to leave time for Q&A, as much Q&A as we can fit in, and as much as our experts can stick around and answer. So we'll be here for an hour plus, but of course, like I said, there is going to be a recording. I don't say that to encourage anyone to tune out, because it's best to be here live and react in real time and get those questions answered. But we will be here for around an hour 15, or maybe an hour and a half, depending on how long that Q&A goes. Willis says it's an opportunity for reckless Jedi traders. Well, there's definitely those opportunities too, Willis, but I think, we have traders who have a lot of experience doing well in these kinds of environments, as we talked about. So hopefully they're able to see the reckless opportunities from the good one and separate them. Jerry's looking for a bottom and then some rebound. Yeah, we're hoping for that too. And Matt's asking, saying, I'm thinking crypto is fixing to shoot to the moon. What are my thoughts? Only Bitcoin and Ethereum are the worthy ones, in my opinion. I tend to agree with the later sentiment, Matt. You definitely, to me, want to back the big established dogs in that fight and not go after any of the meme or junk coins. I believe Jeffrey isn't joining us today, but I've talked a lot with Jeffrey on his opinion. He, of course, still thinks that we're in the Bitcoin halving window, and we should see a lot of movement into the fall, which this, of course, could be a catalyst for. He also says that usually during those halving windows, there's one or two coins that kind of jump that tier from meme coin into the more established ones. I'll ask our experts, certainly remind me too when we get to the Q&A, Matt, what they think about crypto, because it's been a mess. It hasn't, reliably proven to be that flight to safety option that some people thought it might be, especially when, the US dollar is in question. A lot of people thought, okay, well, if the dollar gets hammered, then people are going to turn to crypto. That hasn't necessarily been the case, but there's certainly some opportunity there as well. Let's see here. John says water finds its own level. He's always optimistic. There will be opportunities. I love the positive attitude there, John. Fred asks, where are Roger and Tom? We got everyone we could here on the last minute schedule, so they'll be on future sessions, but they couldn't make today work in their schedules. I apologize for that. Greg says he thinks we're going into a disinflation period, which certainly is, what some people hope is the goal of this. We'll see if that is the result or not. There's questions already for the gurus here from Cherry, which I will ask about in a while. Greg says the market opened down today, then a very short, significant up rally that faded very quickly. Do you think that was an automated computer generated move, or kind of the opposite of a flash crash? We'll ask what the experts think. It definitely had to do with that rumor of a 90-day pause, which did not end up materializing. But we'll get, our guys' expert opinion on that and what was behind that as we sit here about 4 minutes from when we get started here officially at 3 p.m. Thank you all for being here. Let's see how many folks are here. Got a big room, and it keeps growing, so we're happy to see that. We do want all of you to get as much value from this session as we can, so we're glad that you are here and looking forward to a good session here. Let me look at one more thing as we prepare, just trying to see what the interwebs are saying about what's going on in the final, as we approach the final hour of the market here. It's been very difficult, as I'm sure you know, to just stay on top of everything that's happening right now in the markets. An interesting poll from the Kobasi letter asked, do you support President Trump's trade war? Of course, it's a Twitter poll, which is not an exact science, but right now, 63,000 votes. It's about 50-50, which might surprise some folks. But we are getting a lot of mixed messages and a lot of a lot of people are on the side of what's going on and do kind of want that hard reset, and a lot of people less optimistic and less excited about it. It is now 2:58. We've got some folks starting to join us, including Lance. Hey, Lance, how you doing?
Hello, Stephen. How you doing?
I am great personally. The markets are a lot, but I'm doing okay. How about yourself? How's the insanity in the market treated you today?
Pretty amazing. It's been a pretty big day, and I've been traveling too, and it's been almost 200% winners already. So loving the action.
Well, see, that's the opportunity we're going to be talking about a little bit here today. Kane, thanks for hopping on. I know you were here as recently as Saturday with us, so thanks for doing this again so soon. How are you feeling today? Anything major changed for your outlook since Saturday? I know we'll dive into it a little deeper in a bit, but how are you feeling? You're on mute right now, Kane.
Like I can show that picture on Telegram.
Kane, you're muted right now.
Me fishing. Oh yeah, good.
Always good to have
There we
some.
go. Is that
There
better?
we go. Yep, we gotcha. Got to have some
All right.
technical difficulties on a pop-up session like this anyway, so get them out of the way
Yeah.
early.
Yeah, I was just saying that for me, I'm looking for opportunity. I'm very excited about it. It sounds like Lance has already found some really great opportunities. The one thing that I'm very careful and cognizant of is that I'm going in at very small size because in an environment like this, you don't want to be risking a lot of capital. What you are looking for is that oversized volatility giving you the ability to make multiples on your money. And that way you go in a small size, you can still make your normal amount of money. And so if you're not used to high volatility trading, I know Lance basically only trades high volatility, but in this environment, everything is high volatility. So you're looking for those setups where you can just put in a little bit of money and make a whole bunch in return. That way, if you're wrong, you lose a tiny bit. But if you're right, you can still make your normal, what you normally make on a trade.
Yeah, that's super valuable advice right out of the gate. Jeff, I don't think I've been on a roundtable with you yet, so thanks for hopping on with us here last minute. You were a guy that does not get shaken or disturbed very easily. How are you feeling during the market chaos today?
Well, it's just another market. I mean, it is what it is, and there it out. I mean, you just got to trade what it's giving you. I mean, I just kind of jumped in here. I mean, talk about volatility. I mean, you got basically a 500 point, 550 point range in the S&P today. I mean, heck, if you want volatility, there's one for you. So, I mean, that's pretty crazy when you start looking at, something that on average, right now moves about 120 points a day. So you just, spank that by, over 400%. So, I mean, that's the biggest thing. Right now, what I've been doing over the past, couple of weeks, actually month or so, has been just going out and buying way out of the money puts on the SPY and just letting those pay me. I
Mhm.
mean, that's the greatest thing. And so what I'll do is I'll usually, do an even number. And then as the market, has a huge sell-off like we saw last night, when you come in that next day, I take half of them off at, 100%. Now the rest of them are free. And now I don't have to worry about losing on those just because I'm at break even if, the market just flips around and goes back up. But the big thing is giving it a lot of time. I usually go a couple of months out. And so you try to find something between, I don't know, $2, $2.50, and just kind of use that as kind of my benchmark, grab some and see what happens. So, and that's the one thing that I've been doing over the past several months. And even though I might have a bunch of stocks in my portfolio, I'm up on the year just because of my spy puts. So, so it
Right?
really doesn't matter. I
Any
mean,
port in the storm,
I
right?
look at it, it's just kind of a net number. I mean, I look at quote unquote estate value as opposed to, how's that trade doing or how's that trade doing. If the overall account's up, who cares? And that's really what I'm looking at, and kind of going that way. But I think in a market like this, when you have a nice little rally, It just gives me more opportunity to go out and buy some more SPY puts in case this thing tanks off some more. And the big thing is, I mean, I look at them as insurance. I mean, it's just like insurance on your house. You don't expect to get any of that money back, I mean, unless you have a tornado, no hail, or somebody backs into your garage door and smashes it up or whatever it is. I mean, that's when you call the insurance company and say, "Hey, come fix this."
Mhm.
But for the most part, year after year after year, you just throw premium in the trash can for your insurance. And that's basically what this is. I'm just going out and buying a bunch of insurance on what I've got. And if it ends up paying me a lot, cool. Um, and so far it has done that quite well. So,
Very
and I don't
nice.
think the volatility is over. I think we still got a long ways to go. I mean, you heard that little spoof that came out today, where somebody said, the tariffs are going to go away quickly, and market takes off and rallies, and then all of a sudden they go, "Oh, liar," and they pull it back down again. So, and that's basically what you're going to be seeing over the probably the next several weeks. And not only that, I mean, who wants to put their earnings out in the next 2 weeks? I wouldn't. But guess what? We're going to have earnings come out starting in a couple of weeks. So I'm going to be a really interesting, month ahead of us, and I'm kind of looking forward to it, actually. I mean, there's a lot of different things you can poke your fingers at and everything like that. I run several scanners, and one thing I kind of laughed when I ran one of my scanners today. It had, of course, had all these shorts, of course. It had one long stock, GME. It's just like, really?
Jeff, that's the
Of
new
all the stocks
VIX.
that are out there, you get this one? And I was just like, oh my goodness. I was like, okay, fine, whatever. So,
Jeff,
but that's
that
that's the
and
crazy market.
AMC were the new VIX this morning.
Do what?
AMC and GME were the VIX this morning. They were the new VIX. I ran two, the top two, same as you,
Wow.
GME, AMC. Well,
Wow.
everything else was in the crap. The only thing I had up on my scans was SQQ, GME, AMC. Then I had Oklo turn green. Now it's up 11%, but they went straight to the junk this morning.
Wow. Wow.
I
Crazy.
saw that too. It's funny you mentioned that one.
Awesome.
So,
Well, we are expecting a more kind of free-flowing session today as the markets are still open, and God only knows what happens between now and 4 p.m. when they officially close. But I wanted to kick off today with kind of a lightning round for everyone because I know a lot of folks in our chat are really new traders and certainly haven't experienced a day as crazy as today in the past. So for each of you, and we'll start with Lance, do you remember a day this nuts in the market? And, how have you handled it? You said it's going pretty well for you.
Yeah, it kind of reminds me of COVID.
Mhm.
And the reason why I mentioned that was it was February 2020. And I remember I just launched Shadow Trader, which was the institutional order flow, or some people call it unusual option activities program.
Mhm.
And I remember it was very bullish, like, the whole basically promo. And then I started seeing super far out the money puts being bought on like retailers. And I was like, this is so weird. Same with cruise liners. And I heard reports like out of China, some people, it was a little crazy. Like people on the streets, like, you know, going nuts and stuff. But we had like that very sharp decline, and it was just super aggressive, the huge VIX spike. This reminds me similar of it, except the VIX has been controlled rallying. It was never like a V-shaped bottom. It's been a controlled sell-off, a controlled VIX moving up, and then last week we kind of had a liquidation break. And you saw that like in NVIDIA under 100 last week, and then today you had a literally like a 12-point bounce back at one point. So what Jeff was saying about how he's been buying out the money S&P puts, which obviously, you've done an insane amount depending on the expiration of them. I mean, some over the past couple of days have been up 5, 10,000%,
oh
right?
yeah.
Depending how far you went out. What I've been doing, and I did this morning, and I was traveling, shooting some, we'll call it Bassmaster Classic fishing out on the lake, and stuff. I'll show some pictures on Telegram later. all I did was right at around the market open, the first 30 minutes, I was selling those S&P puts via SPX, actually, not SPY, and XXP, the mini SPX. And I was getting insane premiums because the market makers implied about over $100 move in the S&P, or about an additional 3% from the 3% gap down that we already had this morning. So I've just been doing that. So I haven't been trying to, and then I did some love flow Southwest Airlines because Elliott Management, we talked about that over the weekend, some of the airliner bottom fishing and peppering in some longs. But really the big thing is I don't want to get too caught up in the overnight stuff. Like, I don't know what happens tomorrow. I don't know. Like Jeff said, we saw a huge intraday move with the tariff news, fake, real, who knows? I mean, I don't. But what I've been doing is limiting my exposure to risk by really just selling premium. So bull put credit spreads in the S&P or SPX, I should say, because it's an index and you don't have that single stock assignment. And really, I have about 100-point cushion. So as long as the market doesn't fall like 100 points, I'm pretty good. It's like right now we're kind of just fading sideways and such. I'm not trying to get too crazy with it and call bottoms, call the direction, and really just giving myself, hey, as long as we don't move outside what the market makers are expecting, I'm pretty cake on my trade. So that's what I've been doing, Steve. And I would say really since the VIX crossed over 20, VIX over 20, you want to sell vol or turn your trades into a spread. VIX under 20, you want to get more directional buying debit. So buying calls, buying outright puts, because options are expensive. There's no doubt about that.
Yeah, awesome. Thank you. Let's switch up the order here we planned because Nate hasn't gotten to speak yet. And I know it's killing him. So what do you have to add, Nate? What are your thoughts right now?
Oh, so much to add. First of all, Lance talking about selling premium. I'm going to have a heart attack right here live in front of
I
500
know.
people.
You could
Second of
never
all,
sell premium before because the VIX was like 16, 15. You couldn't
well, yeah,
sell
raging bull
premium.
market makes it not as sexy. Second of all, Jeff, my garage was backed into, speaking of the market, and I didn't have enough insurance. Third of all, I do think it's important to recognize what kind of market we're in. I'm glad Lance said COVID. I think COVID is the best and probably the only one that I would, suggest it's similar to. I keep hearing people say things like, "Oh, the AI bubble hit," and I have no idea what they're talking about. This is definitely not an AI bubble. Like, why does Walmart look the same as Nvidia? This is very much liquidity, panic, fear-based market. And I've been trying to tell people, like, just try to watch for the actual liquidity and what the market, what the market's doing across the board. Watch insider buying, watch the flow, because if you go pull up Walmart, ExxonMobil, Nvidia, and Bitcoin, they basically all look the same today. Like, they all gapped way down lower, had that crazy spike, sold back off. And so this is not a recessionary, hey, AI is causing a bubble to burst. This is just a panic, news-driven market. And I think that's, one of the reasons that there's significantly more downside potential, but also like could literally turn and pivot at any moment. One thing I think it's interesting, one of the big differences between now and COVID is that as right before COVID, before the collapse happened, the market had just ticked all-time highs. Whereas here, we were already down 10% before the kind of the Liberation Day, spike on top of it. And I actually think that might limit the downside. I think if the market was at all-time highs on April 2nd, the sheer number of selling would have actually been higher because the market was at all-time highs, and the drop might have actually been worse. I'm curious to see if that plays out, but I think that's kind of an interesting thing to note just in relation. But yeah, I think this is a COVID type market. I don't think it's, and by the way, I would much prefer, I mean, by all means, give me a 25% flush in a month versus a 10-month grind down bear market. Sign me up for that every day if we're going to get a 20% correction. And, we might end up getting 25 or 30 or 35 by the time it's all said and done. But I'll take my medicine in a month over 10 months any day.
Awesome. Thank you. And another person who hasn't gotten to jump in yet, who I know has been talking quite a bit about crash insurance lately and probably feels pretty justified now after what's happened the last few days, is Chris Pulver. Chris, thanks for joining us. And how are you feeling today?
Doing well. Sorry about the camera on my end. I just have this streaming for all of us on YouTube channels and everywhere else. So my camera's on my streaming service. But I'm here, and it's been really interesting. So I hear Lance say COVID. I hear Nate say COVID. I'm going to say we have a hybrid because I think that Friday sell-off felt systemic, and with earnings coming in over these next few weeks, and obviously we lead with financials on Friday. I don't think anybody wants to report the numbers, but the one thing that hasn't happened yet is we haven't really seen the big compression in earnings yet. The expectations are really lofty this year. I think the outlook is murky at best, possibly even negative. Very quickly, you're seeing recession fears going up like crazy. JPM went from 40 to 60%. Whether it means anything or not, I don't think this is just a COVID Fed to the rescue event, because that's how COVID was solved. I think this is different because the Fed is not going to come to the rescue right away. I think the Fed put is still 25, 30, 35% from maybe all-time highs. And so I would blend this 2008 reaction to a massive, financial Armageddon event to COVID, as in, if we're lucky, we see like a March 20th monthly to April 17th monthly if we want to see some bottoms. But I think even a flush back up to, let's say, SPX 53 to 5,500, I'm reloading on hedges. I think this bottom is going to be revisited more than once. And I wouldn't be shocked to see, this is a, Mag 7 rotation that has now been accelerated into a systemic risk of the global economy coming to a screeching halt. You didn't see companies scrambling to go negotiate with the U.S. over the weekend. The Trump administration remains quiet. I'd say lines are drawn, and China's got an April 10th deadline to us. I don't see anybody really jumping in to say, "Oh, we're so sorry, we're going to go immediately to negotiate with the U.S." The 10-year yield is up right now, so it could slowly or quickly become earnings are bad, and you're going to go from a 25 price to earnings S&P down to a 19, 18, 17, 16. Those numbers are way lower, and I would rather be protected the downside, which is, we had a masterclass last week on crash insurance. We closed out a winner today for 96% gains. I'm sitting on 186% wins right now in the futures market on hedges that I'm not closing yet, because those have the potential to pay out like 1,000% if I'm right and I need them. So I don't think I can just say it's over in 30 days, don't worry about it. But I am selling a ton of premium. I just do ratio spreads on Google, ratio spreads on NVIDIA. I sold cash secured puts in SPY and Qs. I am selling premium because these are insane. The VIX has been steadily rising. But in this market now, we have so many more extremes that would anybody be surprised if when the dust settles that we have the highest VIX ever, and we have like the ugliest crash ever, and we have the biggest peak to trough and comeback ever. Like, all these things would not surprise me, that this window of how far we drop to how far we rally would be shorter, faster, and like the biggest and most extreme it's ever been when it's all said and done. So even going back to 2008, that was the highest VIX on record. Somehow it wouldn't surprise me if we somehow get there. But I think right now things have at least stabilized for the day. That feels somewhat better. But I'm going to say that this is a 2008, 2020 mix, because I think this could get worse. I use the word systemic, but that's certainly what Friday felt like. 87% of stocks declining, and the entire world was red. And it didn't make the world jump and say, "Hey, let's go align with the U.S." Right now, my biggest concern, big picture, is that the U.S. is getting rid of some of its American exceptionalism and all this leverage that it's had by wanting to, chat GPT its trade deficit and say that's our tariff policy. It was pretty poorly executed. I think the numbers didn't make any sense, and we're not really negotiating. We're making a threat. So anyway, insurance, trade small, premiums awesome. Don't use all your dry powder yet. I'm still sitting on $1 million in cash. That's about a third of my accounts that I'm not deploying yet, but I will be taking bites and nibbles. I'm dollar cost averaging in to where I like. I think some Mag 7 like Google. I put a ratio spread at 105 by 100. I mean, if I own Google at $100, I'll hold that long term. Amazon, same thing, down in the low hundreds. NVIDIA at $50. I mean, we're talking prices that you'd never think you get any premium for. So That's what I'm liking. But yeah, I just, quick word of warning for traders. We're all going to survive this. Like Lance, Kane, Nate, Jeff, Roger, Jeffrey, all of us. Like, we'll all survive it. But I think that's what separates us from everybody else. Is there are funds that are blowing up right now. There are liquidations all over the place. There are positions that are going to be hemorrhaging. If you can survive this, you'll be fine. But the only way to survive it is trade small and manage risk. And this is a big question mark on where it goes. I think that's the one word caution is like, don't be a hero. The market's going to be here tomorrow and it's going to be the next day. And I don't think bottom picking is going to serve anybody well until we really know that things are going to get better.
Awesome. Thank you, Chris.
Chris,
And
you stole my thunder on the other side of liquidity. Now I have to create this open loop. I totally actually agree with Chris on that point, and I'll tell you that was the other side of my coin that I was brilliantly saving for 20 minutes
Oh,
from
I'm
now.
sorry,
But you
Nate.
blew
I'm
up.
sorry.
That's
You should have
okay.
told
I
me.
forgive you. I forgive you.
awesome.
But to the flip side, there will be people who don't, like Chris mentioned, some hedge funds, and the market will go to the max pain.
Yeah,
And
for sure.
I remember during COVID, I had buddies, especially younger people, who during the COVID boom, remember all the Kathy Wood stocks, all the SPACs, all the
Absolutely.
craziness rallied.
Yep.
So you had robotics, SPACs, crypto frauds,
Yep.
you name all the internet software, you buy NVIDIA, you buy Roku, they're up 50 to 100% in 6 months. You had the craziest rally. So I remember having what they call them, Nepo babies or Nepo babies, the young kids 21, 22, 23, who thought they were the next Bill Ackman, the next
Bull
Warren
market
Buffett,
geniuses.
because
Yeah.
it was so easy, right? You
Yeah.
put your money in some growth stocks, some Kathy Wood ARCs, and I actually had a couple open up hedge funds, family
boy.
money, family, friends, and money. Not huge funds, but enough. You're
Yeah.
wealthy family. When we saw the NASDAQ bear market, what was it, 22?
November. Well, it was November peak 2021, and then 2022 rolled over.
Right. There we
Yep.
go. And it was just the NASDAQ was down about 30% or so.
Yep.
None of them survived.
Yep.
And sadly, if you look back at the kind of the NVIDIAs, look at the AI stocks, look at the quantum computing stocks that we just all had this like big rally, and it was like, oh my God, they won't stop going up. Now those people are gone. So a lot of those weak hands, the one big positive about this, if you can survive, a lot of those weak hands, the little league, the small ball, they're gone. So now you only have the big boys and girls playing. And when you do have that going forward, the market will be a lot easier to navigate than so much smoke and mirrors that, we kind of got propped by drinking the Kool-Aid of, the past policies and everything like that. So it is a good thing. And really, if you're here and yeah, I get your struggle, especially the past, month or so, it has been difficult. But if you could survive and navigate towards this and really getting capital preservation and start deploying, like Chris said, small capital, pepper in small opportunities over time when you do have these crazy dips, you will be very, very happy, I do think, in the long run.
Yeah. Lance, on that really quickly, do you think that the small hands also were kind of getting rid of some of the greedy leverage that's been fixing some of these big moves? I mean, that's like the MAGS move and NVIDIA. Like, look at all the leverage ETFs and the leverage everything that's out there. It's like those are the instruments that are collapsing, and I think it is good to cleanse that. Like, this is why I don't trade leveraged anything. It's like, look, options is leveraged enough. Using cash, using capital, it's leveraged enough. The last thing I wanted to do was a double MicroStrategy ETF, or a double NVIDIA ETF. It's like, it's like, how is it not good enough to be up triple digits in a year on a stock? I need double leverage. Or MicroStrategy that was up, 3 times Bitcoin, and it's like it's already volatile enough. So yeah, I think that I've just phrased that whole crowd bull market geniuses because everything looks great, and that's the FOMO, and that's the tweets, and that's the social media stuff that makes it look like it's so easy. But it's this environment where they're not around anymore. You'll never hear from them again.
And you had to be fair. You had Michael Saylor, the CEO of MSTR, MicroStrategy, go on CNBC, go on major podcasts, pumping up the stock like it can't go down and Bitcoin's going to 1 million. That was the whole narrative we were sold. So he did that around like 440 in the stock and went to 500. Now it's at 260, 270. You can't blame people for getting caught up in this. You were told this was the cool thing to do and everyone was doing it. And now it's like, hey, maybe some crazy Bitcoin leverage, craziness maybe it's not as hyped up as it used to be. So definitely never, ever, ever, use especially crazy margin, crazy leverage with ETFs. That's just a recipe for disaster. And I think a lot of people are starting to realize that now. It's not, all, champagne and rainbows and stuff.
Yeah. And this will ultimately be a great lesson. I mean, if you don't want to learn lessons, the market will teach you. And this is one of those really terrible, sad examples that it does that. But this is what we've all experienced in the past. And if you can survive this and move on, you become a smarter trader, you become way more risk oriented. And that's probably setting up everybody for long-term success.
Right. And you're getting some crazy deals, especially on those,
very true. Very true.
On so many stocks.
Yep.
Kane made a point during our Saturday session, which was him, Tom, and Jack, about how all three of those guys had kind of cut their teeth in markets like these. And that experience really is invaluable. And we've seen so many options traders, especially, join the market in the last 2, 3 years who really just have never had a taste of anything like which is why I think these sessions are so worthwhile. For the folks at home, our plan now is to kind of go through each of our experts here, give them a shot to share anything they want to share, 4 or 5 minutes. And then around quarter till, we're going to let Nate take over the screen. We're just going to kind of all look at the markets live as we get towards the close, see if there are any opportunities there, and then just do Q&A after that, give you all some chance to get all your questions answered.
Stephen, I'm going to hijack.
Okay.
I'm going to hijack the Q&A real quick because I think there's two valuable things I want to hear from Jeff and Chris. And maybe they can shed a little bit of light because it's both of these questions are very important to the markets. Number one, for Jeff, what do you think of Dr. Copper? And can you tell the people just how important looking at copper is in terms of economics?
Well, my goodness, let's open up a big old barrel of worms here. So, first of all, let's kind of go back to what we're kind of seeing right now. All right. When we start looking at the price of copper, copper was up at basically $5.35 a week and a half ago, and now it's down here at 430, 435, 440, whatever it is. You got to kind of step back and, I mean, this is a global metal. It is, I mean, just like oil, it is in almost everything. There it is. I mean, every machine, every electrical line, every computer, anything electronics got copper in it. There it is. Every EV, whatever it is. So when you look at coming into this year, we had Mr. Tariff come on and say, okay, we're going to have tariffs on everything. All right. But in the copper market, he gave a 270-day window before he puts tariffs on them. Now, 270 days puts you out to September, October in there somewhere. All right. So knowing that the tariffs are going to be coming in, what the world was doing and planned to do was to load up all the copper they could all over the world and ship it to the United States because it was tariff free. And what that would do then would get a shortage globally on copper. If you look at the inventories at the LME, which is the London Metals Exchange, which is where they basically base their copper supplies on, it's at huge lows right now. And with that, copper was shooting up like a rocket because the United States was going to be the only one that had copper and nobody else in the world would have it. Up until they said, well, we're going to change that. May 1st, we're going to put the old copper tariffs on. Well, now wait a second. All those ships and all the shipments and everything across the world that are coming to the United States just got screwed because now, by the time they get here, the tariffs are going to be in. And now the world's going to have their copper, the United States is not. And so copper nosedives 28%, just like that in a couple of days. So there's the reason why you've seen copper spike up big time, make new all-time highs, and now get tanked off. Everybody thinks, well, it's just the tariffs. Well, it's a totally different market. I mean, copper doesn't care what the S&P does. It cares about demand on electronics. It's just a supply-demand thing when it comes to copper. And copper is one of the most important things you can watch anytime. I don't care if you trade it or not. I mean, if you want to, throw FCX on your chart and go from there. I mean, at least the only problem with that, it has earnings and CEOs and stuff, and I don't really care for that. But anyway, but if you got to watch copper because it is a very, very huge global indicator. You go back and look at when China was starting to weaken up, and all of a sudden they were lying, and all of a sudden it just started falling out of bed. What did you see what copper did? It fell out of bed because, well, the world's largest producer of stuffs wasn't going to be buying that much copper because they didn't have anything going. So copper is a huge indicator. And when you see copper pull back like this, economically, that is not a good thing. That's because there's no demand on it, or there's not going to be demand on it in the future, not just now, but in the future. And therefore, they're basically saying global economies are going to slow down. That's what it says. And so, I mean, granted, it's still above $4.30. It's still pretty high. Don't get me wrong. Even the S&P, people have seen this S&P, just get totally trashed from the all-time highs. Yes. But you go back to where we opened up last year, we haven't even come close to the year open yet. So they haven't even lost a year in the S&P. I mean, it's not like we're just absolute nosedive mode here. I mean, you go back to, I mean, I might be the only one with gray hair here, but you go back to 2000, you go back to 87, what the heck, but go back to 2000. I mean, I remember, Kane lives in California. Are you still in California, Kane?
I am. Yep.
Yeah. I remember in 2000, a stock, this guy was on CNBC, and his stock was at like 7 cents, and he was the only employee at that company because the tech stocks just got killed. I mean, absolutely killed. And I don't think people remember. People were jumping out of windows and killing themselves because of the tech crash. I mean, it was real, real bad. I mean, I didn't hear anything like that back in the '08 crash. So, but I mean, all of these big, huge market moves, I mean, you think about it. Down markets don't last very long. They are very short-lived. I mean, you look at how long we've been rallying in the S&P and go back to every crash in the world and or since we've been going on here, 2906, I think it was 06, 09 in there somewhere. That was a long time ago. But you had 29, you got 87, you got all these other ones in here, even all the little recessions. They don't last longer than about 18 months at worst. And some of them are even quicker than that. And COVID was a blip in time if you look at just overall market time. But it's awesome. I mean, these times always give opportunity. And Chris is right. Man, keep your powder dry. Wait till everybody just says screw the world, and then you start buying everything up. You nibble
Well,
start? No, but you go from there.
Yep.
and let me turn that to Chris, because you have the price of copper so much for industrial production. Mostly, if we look at China, which China was holding up fantastic up until what, really the past week or so.
Right.
Yep.
Well, you have FXI down 8% today. We're down about KWEB, which is the China Internet ETF. We're down, what, 28% from the recent swing high.
Mm-hmm.
What do you think, Chris, of names like Baidu, Baba, some of those China ADRs right now, since they have been, I mean, you had the market literally going sideways to down, where you had Baba with a parabolic run, to this year. I mean, we almost doubled in Baba from the beginning of the year. What do you see as we pull back, and let's say shares of Baba and some of these China ADRs, we pulled back from literally the breakout over 100 today. We're at 105 and Baba down about 10%. What do you think is next for some of these China plays, Chris?
Yeah, I'm just gonna grab the screen so I can keep the stream integrity going here. But this is, I've got my little China watch list. Let's go to Baba. So I was fortunate to be way early to China, and so I basically, sat through this 2022 low. Once we started to pull back to those same areas, started to really get aggressive back here, like late 2023, early to the game. It's been pretty impressive what Baba has done, but look at how quickly it faded. So the nice thing is there is support. I mean, I'd say at best, Lance, you're looking at like some technical support levels. We are making higher lows. That's encouraging. But I never thought for a second that, China stock is something I want to own. I thought I want to rent it. Like, give me a 6 to 12 month window. Let me make some money in China. Let's get some big explosive moves. September paid very well last year. This run up through February, March paid really well this year. I mean, honestly, China's surge and China's resiliency outside of the last couple of weeks, I thought was a big contributor to why copper was going to all-time highs again. And that's why I said last week felt systemic, because as soon as the world pivoted hard on tariffs and this threat of trade war, I mean, we thought 2016 was trade war. That was peanuts compared to what this actually is and what this actually could become. But you can just see the quick reversal. So look, I still own Baba, I still own Baidu, and I own JD. I dumped FXI for profit. I dumped KWeb. JD is the only other one that I'm in. This is a retailer. You know, their fundamentals are actually pretty strong. I just think nobody really knows the true value of a China play. So if you can make money on it 6 to 12 months or less, obviously, that's great. I do have levels. I mean, if Alibaba, some of the measure moves I'm after, if we had a revisit of these highs, initially I had profit targets up towards a 160 handle. Baidu's had such strong lows since 2022. I thought if we were off to the races towards like a 115, 116. Also, if you don't recall this, but like 3 or 4 weeks ago, Baidu started dripping AI stuff into the headlines as well. And I'm like, well, here we go. This will be like a Baba run. And nope, it's right back down to those freaking lows. So I think it's fine. I mean, we're just having a quick implosion back to these same levels, but I do think these stocks fundamentally are okay. But if it's a risk-off tone, it's like nothing's going to do that well. And what I'll do is I'll just aggressively. I've done this the last couple of weeks. Is I'll sell my calls down. I'll roll down. I'll be more aggressive. I'll trade off my break-even levels, and I'll go from a big exponential gain to I'm just going to repair it for maybe $3 to $5 a share, something like that as some premium. The premiums are so high. If I can just repair the stock and flip it for a 1/4% gain, a 1/2% gain, it'll just be one of the thousands of trades I'm doing that with. But I like I said, fundamentally, I still like them. I just think there's now just a much bigger cloud overhead of, are these actually going to be, good stocks moving forward? Do we have to wait until this clears up between U.S. and China? Because that's ultimately what we're dealing with here. This is U.S. versus China. How ugly does that get? Because I think the entire global economy really depends on it. We have to be frenemies, whether we like it or not. We've got to somehow find a way to get along. China makes everything, we buy everything, and if that dynamic changes, I think the global economy can quickly see how much that will affect it.
Awesome insights. Thank you, guys. Getting towards 3:45 here. So Kane and Nate, you guys haven't had a chance to talk for a while. Start with you, Kane. How are you feeling? What are you seeing? Any responses to anything these guys have just said too?
I'm going to, was it for Nate or for me? Sorry.
That's for you.
For me. Okay. Well, I'll just go real quick. I spoke on Saturday, so you guys don't need to hear a whole bunch from me. But basically, I love what everyone is saying. What we are looking at is a comparison. If we're comparing it to COVID, that's probably the closest comparison that we have, but there are differences. One similarity that I will note is that these two recessions were, or if we call it, I don't know if we want to call it a recession just yet, but these bear markets were all directly caused by a governmental event. So the government came in and they decided on some sort of policy that they put their hands on the market, and then boom, the market went lower. That's not always how that happens. Usually we leave the markets to themselves, and then they do whatever they're going to do. But this time, and in COVID, it was very much directly a government act that caused this sell-off. Well, when you see that happen, because for the most part, it's unexpected. This time, you may had some clue, and that's why the market started to sell off. But then when Trump announced the magnitude of the tariffs, that's when everyone freaked out and we got that sharp drop. So that's a sharp sell-off. And what I think is that you will find close to a bottom very quickly. Not necessarily the bottom. You might have that sharp drop down and then trickle a little bit lower, and then find that bottom. But after that, these sharp movements are over, you're going to be very close to that bottom. Now, how quickly we recover is going to be completely dependent on how everything unfolds. With COVID, the government or the Fed came in and just started printing money like crazy, and that really got the economy, well, not necessarily the economy, but got the markets going again. And eventually the economy got back up. This time, what we need to see is how long is this trade war? How long is the tariff war going to go on? These reciprocal tariffs go back and forth. That's going to help determine how quickly we see that bottom and when it's going to end. And then after that, Chris made up a very good point. We have earnings coming up. The earnings that we're having that are coming up next week, they're not going to reflect any of this. What is going to be important is the forward expectations, what the CEOs say about what's going forward. And every single one of them is going to say at this point in time, I have no freaking clue because they can't. No one has any idea. So that's not going to be very comforting for the markets. That could cause another little uh-oh and then a little bit more of a slip. Once we get comfortable with the impact on companies and on long-term growth, which Jeff was talking about copper as an indicator, then we'll have a better idea of how quickly we can grow ourselves out of this. Also, when does the Fed come in with stimulus as well? So the market has been expecting rate cut, and then lately because of tariffs, they're like hold on, which is the right move. So until we know exactly the impact of the tariffs and how hard and how far they're going to go, it doesn't make sense to start cutting. So once they have a better idea of that bottom, they're going to start cutting, and then we'll start to see the markets get more comfortable and then rise out of this. So the exact timing of that, it's probably a little not as soon as people hope, just because we haven't even seen the end of the reciprocal tariffs yet.
Awesome. Thank you for that insight. Nate, let's turn it to you. How are you feeling and what are you seeing?
Well, I mean, I'm going to end up repeating some of what other people have said, but I do think it's just a chaotic market. I mean, I'll say that if the market finishes at a break even today, it might be the single most ridiculous break even day I've ever seen in the stock market with an 8% intraday move finishing at zero. But yeah, so to me, by the way, I'm actually probably more bullish on the tariffs than almost anyone else, I would say. But I'm more bullish for the economy than for the stock market, which, just to be clear, are not the same thing. And I think that's one of the things that people have gotten a little bit like lazy of, just kind of like, comparing the stock market and the actual economy as if they're the same. I think that in reality, like, Trump's plan has a chance to be net positive. Do I think he's rolled it out in the best possible way? Obviously not. Do I think there's some big glaring misses in there? Yes. But I think that his plan actually has a chance of working, where he could force that middle class up a little bit higher at the expense of some mega caps and things like that. So I think, I'm probably more optimistic, but that doesn't actually translate necessarily to optimism in the stock market. And I think you kind of have to keep a close eye on that deviation going forward. Just a couple things to cover here. So I told folks about this 25% level on the NASDAQ that I thought would be interesting to see if we could find a floor here. We got there a lot quicker than I thought, opened at the 25% correction level. That's where I started, basically just accumulating a little bit, understanding that I'm going to buy some stuff and be very prepared to, take a deeper hit. I think more than likely we'll probably look for that level on the SPY, which is, a good bit deeper here. Although I say a good bit, that's like 1 day's gap down at this point. Here on the S&P 500, I think there's a very good chance that we'll get there. And there's a couple reasons that I think are going on, which I said Chris kind of stole my thunder here, but I'll share them anyway. So the second biggest problem right now, I'm starting with the second biggest problem, is that retail is still a little bit too optimistic. They're still trying to buy the dip. They're still thinking, hey, maybe this is the bottom. And that's usually not a good sign. When retail is trying to buy the dip, that normally means more pain is coming.
I think they're blown out.
It's not good. And so that to me makes me think, we're probably going to go a little bit deeper here, but that's only the second biggest problem. The biggest problem here is that the Fed is not coming to the rescue with $10 trillion of liquidity to pump this market back up, which is what Chris alluded to. So that's the second. I mentioned the big difference with COVID is that we were at all-time highs. We got that sucked down probably even more aggressively than we would now, because the market was already kind of sliding into it. But the bigger problem and the bigger difference is that COVID was solved purely on the basis of trillions of dollars of printed liquidity, which we're not going to get around this time. So we're going to actually see the market bought back up from institutions and from retail traders and from, some working version of a surplus on the retail that comes into the middle class that then they buy stocks with, which is probably not going to happen in 2 weeks, like $1 trillion printed can happen. And here you can see the insiders have not started picking up their buying yet. Now, if I showed you this chart, April of 2020, what you would see here is a huge jump on the retail side. You're not seeing that. Like you would see the blue line way up here in 2020. You would see it way up here in 2009. You can see right now, we're not seeing insiders step in. So they're not comfortable that we're at a bottom quite yet. Meanwhile, retail is trying to buy the dip. Again, not usually a good combination. So I would say my number one advice right now is to watch for the X pattern. What is the X pattern? That is when retail is finally the most bearish and insiders are finally the most bullish. When that happens, I think you have most likely found very close to your floor and you can get a lot more confidence about starting to accumulate. Now, like I said, I'm going to start now, but with the understanding that I am buying with smaller size. I'm just waiting. I'm just trying to get my toes in there, understanding the market could go 10%, 20% more. I don't know. But when this happens, I'm going to feel a lot more confidence to kind of go in heavy. So because I'm starting to accumulate, because I'm more nervous about downside, I think the question is, what am I actually doing on the active side of trading? And the number one thing I'm doing is what I call pair trades. I know Jeff also does some of these. These are my favorite kind of trades for this chaos. And basically, the reason that I love the pair trades is because I'm totally comfortable losing on one side and assuming the other side will make up for that and then more because of the kind of movements we're getting. So, for example, this is one of the ones I gave on Friday where I did a long. I bought calls on the MAG 7, that's MAGS, and then I bought puts on the SPY. I did it at the same time for about the same amount out of the money. So about 2% out of the money puts, 2% out of the money calls. And I thought, listen, if we get a big rebound, MAGs will drive up, we'll make lots of money, and we'll lose some money on the SPY. If we get a big gap down, the SPY will make money, and we'll lose some money on the MAGs. Now, I did this with just one contract. This is just one contract example. And this trade ended up about $400, $380. So if you did 10 contracts, you're up $3,800 in one market session on the gap down without having any idea what direction the market was going. And that's, full transparency. I have no idea what direction the market's going. Hence, these trades make a lot of sense to me. We did 4 in total. Here they were. I'll show you what they were. They were MAGs, calls, SPY, puts, XOM calls, COP puts, Walmart calls, Target puts, IBIT calls, and BITO puts, which is a sneaky little trade that takes advantage of the fact that BITO is just a horrible asset that grinds down over time. And all 4 of these were winners from Friday just to Monday, which normally you don't expect pair trades to work out that quickly. But when the market gaps down 5%, sure helps get things going. And so my favorite one right now is XLC versus XLK. Oh. Now, what I want you guys to understand here is that I'm not like super bullish on XLC and super bearish on XLK. This is still very much I have no idea what direction the market's going. I just give XLC the slight edge here. And so I like pairing ones that I give a slight edge to. So if the market opens up 3% positive tomorrow, it's not like I think XLC is going to be up and XLK is going to be down. I think they'll both be up, but I think XLC has an opportunity to outperform it. And that's why I pair them this way. So I'm giving these about 10 days. That's basically the balance to give it a little bit of time to make a move, but short enough time horizon that you get those big outsized gains. Because what you really want is over 100% move on the options so that the other side can't give you a net loss. In this case, you would buy about 3 XLC calls for every 1 XLK put because you want them to have even liquidity. So you want to have about the same amount of risk on each side. You do 1 for $620, you do 3 for $600. Now you have a fairly even pair trade. I've been loving these. They've been by far the most profitable thing for me since this chaos started on Liberation Day, where so many stocks were liberated to the downside to throw off all their chains and just go straight down. Since then, pair trades have been really great. Another thing that I'm kind of starting to be interested in is starting to accumulate on the MAGs. So here is the MAGs since Liberation Day. And what you can see is that, actually this is not, this is just from Friday. The MAGs are still down about 1.5%, but the SPY is down about 3.3%. Now, for me, one of the things I watch for on these big crashing days is to see if things are oversold. Because a lot of times what you'll notice, even better than on a positive day, is on a super negative day, if something that's more risk on actually gets beaten down less than an index, that starts to give you a clue that, hey, maybe this thing is starting to find kind of a bottom or starting to be oversold. Now, it's really, really important to say then I think the Mag 7 could still go down a lot more. But I just think comparatively to some of the broad indexes, certainly compared to energy and some of the other things that have taken a hit, we're starting to get more value now for accumulating in the Mag 7, in my opinion, than we are on some of the other assets. So just full transparency, I think the Mag 7 could go down 10% more, 20% more. We saw some of these stocks take 60, 70% hits in 2022. So I'm not saying the bottom is in because it's moving less quickly than the SPY. I just think it gives you a little bit of a hint that maybe this is a better value asset to start accumulating than some of the other sectors. And so that's what I'm starting to do with small size. And as we get deeper, I'll keep buying the Mag 7. I'm a believer that while there is a rotation happening here, I think Chris also alluded to that. We might see a major rotation away from the Mag 7. That rotation might last 2 years or it might last 2 months. I don't know, but I'm comfortable holding the stock. And as long as you're comfortable holding the stock, accumulating right now while they're down 30% or 33%, I'm in favor of. Now, I'm also buying gold again. I think anytime gold makes this kind of dip while we're in such a risk-off environment, I'm buying. So continue to buying gold. Been loving gold. Got that rip down and happy to buy more. And then the last thing, sorry, I've gone long here, but the last thing is if you can afford to hold stocks, you're not afraid to take a little bit deeper correction. Selling puts, just selling the direct premium right now is a gold mine. I just looked, you can buy Apple right now 10% below the cost of Apple and still get like a 6% premium on it, which means you can basically buy Apple 16% below its value right now. It's insane.
The weekly Apple options are implying an 8% move between now and this Friday. That's 14.5 points in Apple between right now and Friday. Not on earnings.
Yeah.
Not on Apple. The stock moves historically, a 2% move in Apple would be huge.
Yeah, so if you're okay with buying Apple at a 10% discount, what you can actually get it out is like a 16% discount with the same trade just by selling the put. So, but you got to be comfortable holding the stock, right? You can't go in and say, hey, I'm trying to get into Apple, but if it actually drops 20%, then I'm out of dry powder and I'm going to have a margin call on my account. You can't go in thinking that. You can go in thinking, hey, I'll take it at 10%, I'll take it at 15%, I'll take it again at 20%. If you're in that position, then by all means. I actually just moved the last bit of my cash that I had on the sidelines into my account, ready to do some more accumulating. But I think we all talked about it today. I'm going to use maybe 10% of it now. Then I'm going to use 10% more if we get a little deeper correction. And I'm basically going to have enough ladders where we could see a 50% correction on the NASDAQ. I don't think we're going to, but that's kind of how I want to ladder it from a conservative standpoint. And so I'm about as optimistic as they come. So me talking about 50% corrections is probably like people are like, what is going on right now? But I just think, if this rotation happens to the level that, is the most extreme version of it, you got to be prepared for that and then be ready for the buying opportunity of your life. But keep in mind, the buying opportunity of your life is not going to be a COVID buying opportunity. Okay. It's not going to be a 3 months to all-time highs opportunity. We're going to have to get insiders and institutional investors stepping back in. We're going to have to get a redistribution of money coming back to retail and middle class. That's going to have to get distributed back in the stock. Like, this is going to be a process unlike what we saw in 2020. So I just think that, that needs to be understood if you're jumping back in.
Awesome. Hey, Steven, is Jim Rickards done talking?
I know. Who would have thought? Who would have thought?
Is this Jim Rickards? Is this is this Mr. Dr. Doomsday over here? 50% move.
That was Chris. I said I don't think the 50% is coming. Chris is Doomsday. I'm saying I think you have to prepare the worst case. I'm just saying, and that's the NASDAQ. The S&P, I think if it hits 35%, then I'm all in, and we'll see what happens.
Oh, just a 35% correction then, so nothing.
Well, we're already at 18, right? Well, 19.
Yeah, that's right. All right. We've got about 8 minutes now until the close. Nate, I know there's some folks here who probably have never done a pair trade. Would you maybe want to pull up your account and just show mechanically how that actually works for folks? Since you gave
I mean, it's super easy because
and Nathan, I have a question too about this pairs trade that I think will be very helpful for the audience. Will you go over each scenario? Because I saw your XLK put was a little expensive, and the XLC, the communication call, was very cheap, about a third. Will you explain why you have a cheap option, an expensive option? And let's say tomorrow, market rallies 2 to 3%. How much will that call option increase in value from a percentage gain? And how much will that put option decrease in value from percentage gain to where you can both, from a risk versus reward, still make a positive percentage?
Yeah. So first things, thank you for that lovely question, Lance. First thing, you got to make sure you have 3 XLC calls for every 1 XLK. You got to have an even amount or close to it. So I'll show you here some of these trades. So some of these are close because closing this morning, but you can see right here on the Mag 7, right? This was my call, and I lost $556 on it because the market went down. The other trade that I had tied to that was this SPY trade right here. You can see that one was up 932. 927. Oh, I have another. I was like, why is that moving? Because I have another SPY trade in that same window. So that one was up $950 or whatever, right? Then I had Walmart and Target down here at the bottom, right? So this one's still open. I have my Target puts up about 20%. I have my Walmart calls up about 8%, right? So I just kind of have these different pairs, and I want the actual risk on each to be as close as possible. Because if you have 5,000 in one and 1,000 in the other one, and the wrong one goes up 200%, you're going to be really upset when the other one's down 95%, right? So you got to have an even amount of liquidity in each. That's why you do 3 XLC for every 1 XLK. In this case, I don't know what I paid for the SPY. It was about 120% return. Mags was about a 50% negative return. Mash that together and you get a nice, 25, 30% net return, which, by the way, 25, 30% for me, great on a pair trade. Every once in a while, you get the crazies. But if you can be hedged the whole way on correlated assets and make 25 or 30%, I'll take it every single time. And then our last one was XOM and COP, which is actually down a little bit now. But we have this one out till April 17th. So we've got about 10 days left on that one. This one was up this morning, but it's down about $30 right now.
Greg asked, Nate, are you usually targeting about 10 days on these, or does it vary by?
I give it, well, this is going to be a long answer if I don't give you the short. I'll give you the short version. For these super high volatility ones, 10 to 15 days out, 2 or 3% out of the money, basically looking for an option that can easily go into triple digits, because the only way to guarantee you win is if one side is 100% plus, because then you can lose 100% on the other side and still be net positive on the trade. All right, so just in terms of how to put this trade,
really you need enough time for them to move, right? And in this environment with such huge volatility, you don't need a lot of time in order for it to move. Right. In a normal environment, you probably want to give it a little more time because they need to be directional.
Exactly right. So like my normal profit pair strategy, if you guys are in that, you'll know 6 weeks is normal for that one. And all of a sudden we're doing 10-day trades here, looking for these big gaps and just trying to take profits as soon as they get net positive. Again, 20, 30%, I'll walk away with pretty much anytime. Someone asked, how do you lose on pairs? Well, you lose on pairs when either they don't move or they move or they revert to the mean and they both move in the opposite direction.
Right. But if you're right, let's say on XL, was it C, which was the call?
I think Nate may have frozen.
Yeah, I think he froze. So I'll explain real quick the risk versus reward.
His back.
So if you do the XL, was it the call, the XLC?
Yes, sir.
So it's a $2 call option. Let's say hypothetically, XLC and XLK both go up 5% tomorrow, right? Huge gap up. Oh my God, it's crazy. Let's just say, or this week. The $2 call option is probably going to, let's just say, go up 100%. We'll say double in value. So it's going to go from $2 to $4. You make 100% gain. The XLK put is probably going to go down 50% because it's an expensive, I think it was an in the money put, if I'm not mistaken, but it was very expensive. It was about 3 times the price. So that put value, since it's so higher price, won't be as sensitive as the low price call option. So maybe you lose 50%. So net, you made 100%, you lost 50%, you're up 50%. That's when you're doing, hedging strategies like a pairs trade. That's where you're really looking for that big gain, because you can be wrong and only lose half your money. When you're right, you double your money. So that's where it really comes into the risk versus reward. And, you might only be a 50% right? You're only 1 out of 2 is right, but your net up because the one you're right a lot more from percentage gain rather than the put where you're buying expensive puts where you're not going to make as much money if you're right and you're not going to lose as much money if you're wrong.
Yeah. And just to be clear, if you're trading the pair trades right now, what you're doing is you're trading into this crazy volatility where you're expecting big moves. But let's be clear, that's also where you can get burned on pair trades because you're paying for all the volatility. Then the ATR falls off a cliff. Now, all that volatility you paid for, the market doesn't move enough to pay you off. So you have to be very careful. But while you're in this extreme zone and the market is legitimately making 8% intraday moves, then obviously you're going to be in really good shape. You just have to, make sure that you're understanding, hey, this is a kind of a hedge piece that I'm adding to my portfolio. Not I'm putting my whole portfolio into this because if that ATR falls off a cliff, you're just going to burn up the premium on both sides. And that's where things can get dangerous. So just, again, keep that in mind.
90 seconds or so till market close. So if anyone has anything they want to get in there before the closing bell.
Or what you could do, Nathan, is you could sell premium each day in the SPX or the mini SPX, which is the XXP, and you're getting to do it right around 10 a.m. as I've been showing y'all. And
welcome to the call, Jack. I didn't know you were joining us today. Lovely to see you here.
Let Mini Jack show y'all real quick because we're about to have the market close. So let Mini Jack. I'll do a quick thing real quick here. Let Mini Jack show y'all the cushion point of view. And we're sadly not going to get too much because the market's here. But for example, instead of trying to get perfect timing intraday, which has been hard, I'm giving myself some pretty big cushions on the S&P or SPX. Let me show you here in SPX. So today we had about 100-point implied move in the market. It looks like we have 177 for tomorrow. So realistically, by the time we open, probably another 100-point move. So today I went out 100 SPX points or 100 S&P points. You see I sold a 490 put or the 4,900 put. That's 160 points out the money.
That's crazy.
That is pretty insane how far you can go. And
how much did you get on it, Lance, for being 160?
I got $1.10. $1.10, and for SP and then for XXP, I got about 19 cents. So about 20%.
I mean, really about 25% because your risk is only 80 cents on the other side, not even the full dollar.
Right. So you can get you could get some pretty here's for XLK. You're implying almost a 4% move this week in XLK. That's huge.
That's crazy.
You look at Apple, like I said earlier, 8%. I mean,
Lance, you should do both. You should sell the premium and then
you can sell the call. Yeah, you can sell the bear call spread.
If the ATR slows down, you're gold. If it speeds up, you're gold. I mean, this is like a match made in heaven.
It is. If you are a premium seller, I mean, you are getting, I'll stop sharing the screen here. You are getting such juice. You obviously don't do naked options like naked puts because that can be difficult if we get a crazy gap down unless, you're skilled and you're there to management. But you're getting some crazy premiums now. Or what you can do instead of just buying outright calls, I can't go out to Apple and buy May calls. I want to, because I think Apple's going to recover. But for a 180 call, I'm spending $14. That's pretty wild. That's pretty insane. So what you can do too is turn into a call spread, a bull call spread and stuff like that right now to help limit your net debit. But like the gentleman we're saying here, don't go crazy going all in here. You do have Delta bank earnings kick off this week. Next week, you have more banks. And then you start getting those Mag 7 stocks with Netflix kicking off earnings. And remember, stocks historically move 4 times a year. That's earnings. I don't know what the big cap mega tech earnings are going to be. But what I can say is if you're looking for some kind of catalyst to move the markets and you're, crawling and wishing, hey, can we get some kind of recovery? I mean, what can cause it and really spark a huge surge is when you start having Netflix Amazon, Google, Microsoft, Apple, Facebook really start to come out with earnings. And obviously, if they're good, the market rallies. But I will say it's very encouraging today. The reason why I'm being so positive and so I don't know, I don't want to say giddy bullish like I'm Tom Lee or someone, but I mean, I'm looking at Amazon 2.5%, Meta up 2+%, Micron, WDC, some of these chips that have gotten whacked up, Avgo 5%. Freeport, we were talking about copper, Dr. Copper up 4%. You're really starting to see, hey, if the market starts to recover, where are they going into? There you go, perfect. Where are they going into? The old Mag 7 stocks, the Facebooks, the Googles, the Amazons, the Nvidias. They're basically showing their hand where you can look for that rotation. If the market does start to bounce or to lead, you know exactly what names they're going after. And
don't you think,
also,
Lance, don't you think on the earnings side that there's going to be a couple companies that come out there and just say, listen, all this tariff news, bad, 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 but it's not going to affect us at all. We're going to be great. Like, and get some crazy responses.
That'll be the new buzzword.
And
Not
that's
affected by
where,
tariffs.
yep, and that's where I think those Mag 7 stocks can shine. If you're like Restoration Hardware or, retailer, obviously it's going to be a little bit more difficult, right? Because the uncertainty. But if you're Google CEO and you're like, well, we got some Gemini badass AI, like YouTube numbers are good. Yeah, tariff, but it's not going to be do or die like it would be if you're, a company, a retailer, getting all your products from Asia and stuff like that. So I'm basically trying to be pretty optimistic right now. I know I sound kind of giddy bullish, but today's very encouraging. Supermicro, Oklo, SMR, Archer, Micron, these names that have been getting whacked, like left for dead, boom, huge surges today. And, the market kind of really did nothing all day, but go sideways after the initial, volatility at the open.
And we
So,
saw what that fake news, we just saw how readily people are willing to jump in with that fake news. And I mean, that was kind of a quick insight into how quickly people are ready to jump in just based on that.
yeah, or the
I got a
computer.
real quick question of clarification for Lance and Nate, since you guys are saying, oh, well, I'm pretty bullish here. I want to clarify for everyone watching, like, you're bullish as in like, hey, we could get a nice little bounce from here, but are you bullish in the sense that, hey, we're going to fully recover and make all-time highs here?
I am a little dumb long right now, so I guess I'm hoping we recover, but I do think the U.S. markets do. I hate to say like the next 3 months, but I do think we start to stabilize. Obviously, bank earnings could be kind of the last spook, depending on what they say. But I do think kind of the worst pain is over. We saw the liquidation break Friday. You had people selling gold with a huge gold sell-off Friday to meet margin calls, and then gold down today. And then crypto over the weekend, probably lots of margin calls with a big sell-off. So it feels like the big flush, the big tidal wave has hit, or the tsunami, whatever. And I think the waves aren't going to be as vicious going forward.
But the one thing that I'm worried about a little bit here is with the tariffs and everything like that, shipping containers are going to be a lot more expensive. So if I'm a Walmart, who cares? But if I'm someone that is a very small retailer person, I'm going out and buying whatever's in the container for, 30 grand, 25 grand. Now I'm paying 80, $90,000 for that same container, and I don't have the money to do it. So I either got to lay off employees or I've got to do something to offset that somehow. And that's the little guy is the one I'm worried about as far as the shipping stuff right now. Big
But
guys,
Jeff,
you're right. Who cares what they do? They got the money to do it. But these little guys don't.
you don't think lower taxes though is going to stabilize that though? Is
Well,
help offset that going forward?
well,
Because that's probably going to be the big new thing is the lower taxes for.
well, and I don't disagree with that, but I mean, you're talking about a month by month thing on the container ship where taxes come in. Well, I mean, employment taxes like once a month, whatever it is, but you're not getting all that tax cut in 1 month. It's over time as opposed to month on the container. Now, it will offset it some, but that's the part that I'm watching to see if that levels out and everybody's all copacetic with it. But if it's not, and it starts hurting the little guy, that's your Russell guys that are going to get,
Right.
kind of slammed.
But the Russell, so I would make the argument the Russell has gotten slammed the worst and has
Right.
underperformed for really going back for years.
Mm-hmm.
So I look at it as, let's say we get through this tariff initial shock.
Right.
We start getting tax cuts and lower rates. So those smaller companies can get out loans, can grow, right? Get financing, get debt, cheap debt. Because right now, the Russell stocks, the small caps, when we say the Russell, they've been struggling because of high rates, right?
Yes.
Higher
Right.
cost of money.
Right.
If we get lower rates, which is the president's goal, he wants to lower rates to boost the economy so more people can, start businesses, buy mortgages, lower mortgages, buy houses, right? More money, cheaper money in circulation, really get leveraged like, he did with real estate.
Right.
But that should be a catalyst for small caps, for smaller companies to grow going forward. I don't know how long it will take, but I'm kind of in the boat of, yes, the tariffs are throwing huge, especially to retailers, huge question marks everywhere.
Right.
But I actually think the small caps can really get going if Trump policies, taxes, mostly tax cuts, get there. And I don't think it's going to be instantly, but I do think if we see the Russell 2000 lead the way, that's kind of going to be the go-to of the market, and maybe not necessarily Mags or Dow or the Nvidias, Apples, Amazon's leading the way. Maybe it's small caps lead the way, and we go from there. So I'm just trying to look at everything from every angle because it has been just a bloodbath lately.
Well, yeah, but you see the long bond lost 4 handles today, where your 10-year
Right.
only lost about a handle and a half. So, you've got rates kind of spurt back up a little bit, which kind of amazes me that the Russell kind of maintained itself today with that.
Right. And you had the yen sell off so much. Like the yen's almost filling the gap to the downside. And historically, I know we spoke about this the other week, the yen is a flight to safety. The long bond's a flight to safety. Gold's a flight to safety. Gold sold off Friday. The long bond sold off, what were we, down is it really 3%?
Yeah.
That's a massive move. A 1% move is big.
Yeah.
A 3% move. So it's like, are we broken structurally? Possibly. But if you look at the markets today, we basically finished flat. Like, I would say that's a win. If you're a bear, you might be looking at it like, well, now it's just time to reload. But yeah, it's
yeah.
Yeah.
If you guys had to take a pick between, we've been talking Mag 7 a lot. Mag 7 is what led us out of 2022. Mag 7, we rode the coattails from 2022's bottom into what finally became a broader market, in June of 2023 and November of 2023. And we rode Mag 7 all the way post-election 2024. I look at Russell, and I think my only concern about getting big on small caps, and I want to, because it's so beat up. But if we look at that technical formation, that center low between that, May to October 2023, so it would have been like summer 2022 into October 2023. That low here, I'll share my screen real quick, guys.
The 165 on the IWM.
Yeah, so that low. Let me swap the screen here. Share. Because if that's a double top formation and we break that center low, we're going bye-bye. Yeah. So we're going I would rather take the chance on selling high premium on companies that do make money, like Mag 7. And I know it's going to be a rough ride for them with this rotation, but fundamentally they're still pretty darn strong, in my opinion, versus the Russell, which of 2,000 stocks, about 70% of them right now don't make any money. That's a big concern fundamentally, is if it's a flight to quality, I don't think Russell's going to do all that great, but I think the catch-up trade has been there. I've been fortunate to grab, on this breakout move to the upside and this breakout move to the upside to retest these highs. I was long Russell. That worked out very well. But this high to this high, to this low, if we don't, I mean, I would definitely take a defined risk bite right there. But if we break that level, unless it's a bear trap, I mean, I hate to say it, but that could be where this, I mean, sure, I'll load up on Russell at 100, but
But
I don't know.
what rallied the most aggressive, though, if you go back from COVID? The Russell
Russell,
recovered the quickest.
absolutely, yeah.
Well,
So
and
if the recovery's there, I like it. I'm just saying, like, if a flight to quality, Russell's not the quality bid for me.
no, I
That's
think the difference, the reason that IWM small caps are interesting to me is not a flight to quality argument. It's more just a risk reward argument. So like basically, do you give the administration and the economy some percentage chance that this kind of big flip actually works? You know, like, and what percentage is that? Because I give it a chance, and if it does, I think that the small caps flip, lead the way, and then I think the risk reward on them is better than any other asset class, essentially.
And
Yeah,
I
makes
also
sense.
think too, the administration is looking at not the Nvidia shareholders, they're looking at more middle class
Yep.
average Joe.
Yep.
So if you have a crack like we saw in Mags, it's not as well, those people are already rich, who cares? It's trying to get kind of the level playing field. And Mags can borrow money if they need to. I mean, it doesn't matter, right?
Sure.
They're basically, I mean, cash hoarding, you know.
Yeah. Yeah.
The smaller Russell companies, I mean, they have to, and they
Yeah.
need lower rates. So
Good point.
it will be interesting. I mean, there's so much unknown right now. I mean, I'd heard they're cutting income taxes for people making less than $1.40 your family a year or something like that. Like, that's pretty wild. Like, so what are they going to do with in general with taxes then? Like, I mean, a lot can be announced, and I do think we are in a little bit of a news driven market, to say the least. You know, as Nathan mentioned today, with the
Nah.
8% intraday swing in the Qs, like, you know, you could wake up, the market's up 5% tomorrow, or wake up, you know, this morning, you know, down almost, you know, 4 or 5%. So you really just have to be nimble. And, you know, if you do have money to invest, you're in a better spot than, you know, 90% of most people. But you are getting some, you know, definitely you're going to have some fantastic opportunities in the future.
Yep.
Hey, Carmen wanted to know your view on IWM and small caps and potentially flipping there.
On the chances of flipping, or
Yeah, just your thought, how you feel about it.
yeah, I would say definitely you would look to IWM as a leading indicator if there's going to be a real recovery. So if you do see small caps starting to lead ahead, that is definitely a good sign that we're recovering from this. But it doesn't necessarily have to, right? It could just be that the bags have such huge pricing power in the markets, or if we do start getting lower rates, if the mags say, hey, I want some of that money, they're just going to take huge swaths of that, and then you're just not going to have capital available to the smaller guys. So it's not necessarily, it's not like a end all and be all, just like for sure the IWM will start to lead if we're going to have recovery. But if we do see them leading, that's a very good sign that we're having recovery.
Awesome. Thank you. It is now 4:15. I know you guys jumped on here last minute, so I know if you have anywhere, please feel free. But we do have a ton of questions, so I'll start asking them. And if you need to drop out, don't be shy about doing it. Jeff, one thing we haven't touched a ton on yet that I'd love to get your take on is kind of three of the, non-stock commodities that people are watching very closely: gold, and oil, and then bonds, especially today, with a big swing that we already mentioned. What are you thinking about on all three of those, and what should, maybe traders be looking for there, and in terms of how to read, what's going on and where things might go next?
Buy gold, short crude there.
Well, all right.
Um, for the most part, I mean, if you let's say past performance is indicative of future results. Let's break the rules here.
We're not allowed to say that, Jeff.
Yeah, we're not allowed to say that.
Yeah, kick them off.
So, if you go back to when Trump was here the first time, we had crude oil between 25 and $35, right? You've got Chris Wright that's in there at the energy secretary. You got him in there. Both of them are wanting to really put the crunch on crude oil. And I mean, when I woke up this morning, crude was below $60. It didn't stay there, and it's really worried about that level. It doesn't want to break 60. If it does, they're going to flush the toilet in crude. 60, I mean, if you don't know, $60 is break even profit for frackers.
Right.
You bust that, they start losing money. There it is. All right. So it's a real critical level. And my thought is we start closing below, $60 on crude oil, I think they're going to probably try to get to 55 to $50 before long. Now, on the flip side of that, I think you're seeing a lot of selling in gold, recently. Two reasons. One, technically, we hit 3,200. Every time they hit a century mark, they back the thing up. So there's that one. But number two is everybody's taking a lot of profit in something they got money in to offset what they're losing money in with all the stocks going down. So you got kind of an offset there. But I don't see where crude can go. I mean, not crude, but gold can go much further down. I'm with Nate on this. I mean, he was in here saying buy gold, buy gold, buy gold. I agree with that. It wouldn't surprise me if they don't try to shake it out a little more. They probably will go down probably 29.50. I don't think they'll bust 2,900 though. But
Watch the
I
200
mean, I
moving
think they're going
average.
to shake this thing out just a little more and probably get past the CPI and the PPI. And if it sustains that, gold's probably going to, just go right back up to where it was before and probably start making new all-time highs. Silver's back below $30. That's not good. Silver's got to get back above 31 and a half, and I'll be all happy and pink inside, especially if copper goes along with them. Copper's got to get back above at least 450, if not 460, to really get some life back in it. But you've got a weird trade thing going on there, and that's where I'm scratching my head going, okay, copper, what you going to do next? But you see copper get back up to $5, I'm going to go on Lance's side. He got the bottom feeding done, and now we're going to start taking off. This economy is going to start recovering and everything like that. Recession, I don't think we've got one coming. I think this is just a little blip of life, and I don't think it lasts all that long. Now, does it last, 2 months or does it last 6 months? I don't know. But I mean, you just kind of go out and look at, the economic reports. They're not that bad. I mean, you're not seeing massive layoffs. I mean, you had less jobless claims last week. You had higher employment last week. And so when you sit there and look at that, you go, well, okay, so people are still hiring, so the economy's not doing that bad, or they wouldn't be hiring people. So I don't think there's a whole lot of bad out there. I think all of this is just strictly based off of what are the tariffs going to do next? The market hates uncertainty, period. And that's why you see the VIX smoking up here because, well, it's everything's uncertain. They don't know what's going. We don't know what's going on. I mean, we don't know what's going to happen. We don't know how this is all going to play out, and that's what the market hates. And so I think we continue to see gold moving up. We see crude, continue to push down. They're going to, no downside pressure on it. The only thing that saves crude is if the oil guys, the Exxons, the Chevrons, and all those people out there look Trump straight in the eye and say, no, we're not going to pump. We're just going to keep things the way they are to keep our shareholders all nice and neat. We're going to make our billions of dollars, and you're not going to make us do it. And so there's going to be a fight right there on that line. And so do they want crude at $25? No, they don't make hardly any money at $25. But
Right.
Trump wants it there, believe me. And so it gets shipping costs and everything like that down. I mean, there it is. So there's going to be a fight this time around. They let him have it the last time. The biggest problem, and one thing that I get a lot of questions about, is that Keystone pipeline. They keep bringing up and cutting down, bringing up and cutting down. The problem with that thing is the oil guys got bit. They started building it. Obama shut them down. Trump gets in. They start building it. Biden shut them down. And now Trump's back in saying, build it. And they're going, no. We lost money already. We're not going to do this again. And so I think you can probably kiss that thing goodbye, and they're going to go on to other things. So, that's the fight you got right now. And until that little dispute gets settled, we'll see if crude busts 60 or if it stays above 60. There's your pivot right there. Just because it's a price point in the crude oil market that you either start making money or you start losing money. And that's a real important number. So here we are at it, and they are holding on to it the best they can.
Awesome. Thank you. We got a question in there from Jorge about Tesla and everyone's thoughts on that. Lance, why don't you kick that off since you are the Don of Tesla?
It is like pulling teeth and playing the vol in that stock. I mean, To give you an example, the implied move this week is $30, so over 10%. Or the at-the-money straddle, I should say, right now is 12 and a half, let's say 14, $26. So yeah, over 10%. The stock's down 2.5%. The April puts are up barely any, 15%, 10%. The calls are down 15, 20%. It's almost impossible to trade it directionally right now in the options market because of IV. I mean, you have to sell premium and hopefully nothing crazy comes out. From a technical standpoint, we're, basically at support, holding 220-ish back and forth. I have two fears. One, we break 200, we flush down to 180 and get stuck there. Obviously, tariffs, China, all that stuff is bad for it. So much, I guess, fake news you can say going on with Musk and what's real, what's not. It's next catalyst is earnings. And historically, vol gets higher into earnings. So I just don't think we're going to see any opportunity for, to trade directional probably until the earnings event, which is usually about the third week of April or so it should be.
4:22.
It's kind of sit on your hands. If you want to sell vol, that's probably the way to play it. But the options, when you're having the stock move 10% intraday, like butter, I mean, it's literally like going to the casino, playing craps, and hoping you get lucky right now. So I wish, and I'm the biggest Tesla bull, and I got so much retirement money into it and structured notes and everything like that. I basically just need the stock to stay above about 130 or so. So it's $100 from where it's at. But it's extremely difficult. There's no way to sugarcoat it. I think if the market recovers and, mags start going up, it's going to be probably one of the most aggressive stocks to the upside. But right now, I mean, I feel the pain. Trust me. It ain't fun.
All right. Thank you for that insight. We do have a little bit of a breaking announcement here. We've been kind of working on something behind the scenes here for folks who are out there dealing with the tariffs, as we all are. Nate, do you want to share a little bit about what we've been working on?
Oh, yeah. I meant to show this like an hour ago and I totally forgot. Okay. So just for everyone out there with the craziness, we're building a little tariff tracker tool for you. This is under development. We just started. So this will be free for everyone, but we just thought this would be nice. The Prosperity Pub official tariff tracker. It'll have some more data in here. It'll give you the news. It'll kind of create some speculation based on where things are versus the price we're checking. And that way, just in the morning, instead of saying like, searching through X or checking, charts or anything, you just go to the tariff tracker, see if any new tariff updates are coming, what today's change is, the total net change, and it'll give you some of this data. So we literally just have been pulling this together. It's not final. Some of the data in here needs update. Oh, look, lots of errors. Some of the data, but we're hoping in the next 48 hours to have a final version that we can just send to all of you for free, just as our way of trying to kind of give you an extra tool to help you and give you some extra intel. So you guys can check it out now. Steven shared the link. That'll just give you the super ugly demo version that's still being worked on, but that way you have it. And as soon as it's final, you can go there. But I forgot to mention that earlier. Just trying to work on some things that are valuable to you guys, so that you have something to lean on and use in your trading.
Awesome. Thank you, Nate. We're already been here for an hour and a half, so want to let everyone get out of here pretty soon. But why don't we just go to everyone, get a final word, final 30 seconds or so on what we're watching and anything you want to leave folks with. Lance, let's start with you.
Well, I'm watching everything under the sun as always. But today I was filming and bass fishing. We caught about a 3.5 pounder. So I'll post that on Telegram. But what you can do, and actually, Jeff, Freeport CEO, just said, we're concerned about global growth. Freeport is the big copper play. Freeport and Tech are usually the two best with liquidity in the options market. But thank you for having me, Steven. I think I might be taking your job being the host next time. So if you guys want me to, send the commission check, Publisher Nate for the host. I will be the next Vanna White, the next Pat Sajak, the next Steve Harvey. No, but seriously, if you want, I go live on the YouTube at 3:30 every day. So just follow me on Telegram or just YouTube, Lance Ippolito. And I've been going live every day. I used to go live at 9, then publisher Nate kicked me off because my
I always give
SPX
lanes
and
for everything.
XXP trades were too good. And some of y'all in the chat were talking about them. Once you trade this way, you'll never trade again. And he moved me to 3:30 p.m. because I'm the redhead bastard stepchild. No, I'm kidding. But it's a lot better because we got to roll the dice. We got to put on trades. Jason messaged me today. We did Walmart UPS puts on Thursday last week. We had it like 180% in UPS, 130% in Walmart. So now I like Publisher Nate again, and I like the 3:30 time slot. So come, we trade the scanner. We trade anything under the sun. You know, you can ask questions, whatever you guys and girls want. Feel free to come. That's 3:30 on the YouTube, and just get the Telegram. It's Stockomania, Crush the Close, whatever it may be. I mean,
Or Deanna
enough.
can drop that in the chat
Yeah.
for us here.
Excellent 30 seconds, Lance.
Thank you for being here.
Oh, yeah. Well, I'm probably going to get fined for this now.
Let's go to you next. Any final thoughts, Chris?
I mean, I really appreciate being here. I think this is a great session as always when we all get together. Look, this is about survival. I'm taking, daily opportunities. I'm taking weekly opportunities. Right now, sellers and sellers of premium have an incredible, incredible treasure chest of opportunities if you have the capital. That's the hard part, is not everyone has the capital. I'm just going to do a quick shameless plug for a couple of my courses. Let me go here, update here. Got Nate's pairs trade. So we continue to grind every day. Lance, I don't want to step in front of your crowd, but I'm live at 3 p.m. every day.
Oh, see, that's why I can't go at 3. There we go. The 3:30. Go to Chris before.
Yeah, there you go. So just a quick rundown with my daily opportunities, daily profit play. We're 49 for 53 trading in this crazy environment for the last month. That's been pretty rock and roll. And then we're 69 of 74 with waterfall income with some really nice swings. We put on two today. We've been trading both up and down. So we're making money on the down move. We're making money on the up move. We're sticking to the mechanics. We're not taking crazy risks. Just steady income goes a long ways. The crash insurance course I launched last week, we had a lot of fun with that. Already hit 100+% winner. I'm potentially sitting on 6 figures of hedging when it comes to some of my futures trades. We'll talk about that more this week on Thursday. So look, we all have our own services. We're not asking to overcompete or outcompete with each other. Follow any of us, and we're all here to help. That's really the best message for the day. Is we're going to trade through this. We're going to survive this. We'll help y'all navigate it, and we'll be here trading for the next 3 months, 6 months, 12 months. When it's all said and done, we can have the same roundtable in 6 to 12 months and see who is right, who is wrong, how it played out. But I'm pretty sure we're all going to be seeing a lot more green in the accounts than what it feels like right now in these 3 or 4 days of uncertainty. But that's it.
Awesome. Thank you. Lance just dropped in the chat that GME CEO just bought 10 million in stock shares.
Well, there you go, Jeff. Now you know why GameStop was bid today.
There you go.
Ryan Cohen purchased 10.7 million in
Wow.
GameStop shares. Shares are up. Wow. Get this, at 21.55. Shares are now 24.70 after hours.
Man.
What's funny is on GameStop, I played the earnings that got the pop up to 29.85 in the first place for a nice little 40% winner going omnidirectional. So now it's but a quick question: are these companies that are now going to start talking Bitcoin and what they're doing with their cash, talking about buying Bitcoin, pulling like a Michael Saylor play? Is this the new stock buyback? Instead of announcing stock buyback, now it's like, hey, we're just going to take our cash and buy Bitcoin. It's like, is that just hype? Is that a thing? Like, Bitcoin isn't foolproof. It's still, I'm reading it's a moat with an emote, and MicroStrategy has been way less volatile, but it also hasn't really acted like the market yet. So, Bitcoin came down. I think for Michael Saylor, anything sub, 70K Bitcoin, anything down 65K Bitcoin, Saylor's going to look like he's running a Ponzi scheme. So, and I'm long Bitcoin. I've got clients long Bitcoin. I've got 3 to 5%. I've got 10% personal. It's I'm long Bitcoin, but I just don't think it's this all in. It's the only thing that survives a freaking great financial crisis,
But look at Mara.
Yeah.
It copied the same strategy, as you said, Chris, with Michael Saylor of MicroStrategy. And that is the worst stock in the world in crypto. Even when crypto goes up, it goes down. So, I think GameStop's a little different because they do have, I mean, I guess you could say it's a business and, whatever. And they are shutting, I guess you could say they're a retailer shutting down stores. You have the new PlayStation coming out, new
Yep.
Sony Switch or the new Nintendo Switch. And apparently now I mean, trust me, I got my wrestling cards and Pokemon cards. Apparently now they're a grading company. They're working with grading companies and like a collectible company, which that market is booming, to be fair. If you want correlation, look at the sport card Pokemon market to the stock market. You see it almost like a one-to-one correlation. But I mean, it is a little, doesn't it seem like kind of like SPAC-ish, kind
Yes.
of like pot stocks, kind of where you just
It's
have
the
companies.
buzzword. You
Yes,
mentioned Bitcoin now. It's better than SPAC. It's better than AI. It's better than quantum computing. Now it's like, okay, well, Bitcoin could be. So I don't know, and it's going to get like I hope it's true. I mean, so this whole thing about the middle class getting improved and getting like a little bit of a hand up, or like I love this idea. And one thing I was really optimistic about Bitcoin with is the fact that all of these younger investors that don't have a ton of capital, that haven't ridden the stock market for 20 years and been profitable on all these crashes, Bitcoin could be like the greatest equalizer ever. That's like what I'm trying to be optimistic about. But I also get super concerned when Donald Trump's family is trying to launch a stable coin as he's president of the United States. Like that shit concerns me that it's just like he could literally bring about this like fraud to what should be good and maybe optimistic, but there's still like there's trouble out there brewing that I just don't love. And I just don't know how there's not checks and balances with stuff like this. I mean, I know we've smoked out like FTX but I don't know, man. That's like the one thing is like it's a risk capital play, but I just think it, like you said, Lance, is too like SPAC. It's just too buzzword right now, and I just hope that we don't see that during earnings calls. It's like, well, we've got $1 billion cash, we're going to buy some Bitcoin. It's like, don't make
right.
that the trend. I don't know.
And I think too, everyone who owned a lot of crypto, maybe not Bitcoin, because I mean, the average Joe does not own Bitcoin. They own the shit coins, the cheaper ones, right?
Yeah,
Because they
yeah.
can buy more and it's more of a psychology aspect. I don't think the Bitcoin holders, I think they got blown out. Like most people probably bought Bitcoin around or the cryptos
The
around
top.
10,000. And if you look at like Ethereum and stuff, they're down, 50%. I
Yeah,
honestly, I think all those people are gone, quite
yeah.
frankly.
That's true.
So I don't think it's like as attractive to say we're in crypto. But what does concern me and what you kind of mentioned is when you have the president and his wife launch a crypto meme coin.
Yes.
His son's on the board of some, what is it, Hut. And then Michael Saylor and some of his sons were saying, buy the dip in Bitcoin at, what was it, at 88,000 or so. And now it's
Mhm.
basically 10% lower. It is kind of like a penny stock pump and dump garbage.
Yeah.
So,
Lots
and
of
then
concern.
Risk
stable
capital.
coins, the SEC
Yeah.
came out and said they're not asset classes, but then you have everyone in the administration, or not everyone, but you have a lot of like the all-in guys like Shamal's trying to get stable coins to be the next big thing because they have
Right.
such a heavy, stake in the game. So it's
Right.
like a lot of it, I mean, personally, I just never got involved and I think it's a bunch of just smoke and mirrors, but
Let me jump in here real quick and give Nate a chance because I know he's got 7 kids waiting on him outside his door. So Nate, any last words you want to say before we jump off?
No, I mean, I think everyone hit the nail on the head today with what we've got. For me, it really is kind of that X pattern, looking for retail to be bearish and insiders to be bullish. I really do believe that's the best indication of a legitimate floor, but I'm still kind of scooping up stuff in the meantime. I like the IWM play, even if it has a little more downside from a risk reward perspective. Just like Tesla, same idea. Tesla might get burned, but from a risk reward perspective, I still think it's the best opportunity in the Mag 7. And then I just want to publicly disagree with Chris and say that I think we all compete and my services are the best. No, I'm just kidding. No, he's totally right. The things that we do here are all about trying to complement and give people different opportunities. And so hopefully, everyone kind of finds a lane that they're excited about, that they that meshes, and whether it's any one of us here or someone else, that there's an opportunity that you find that really fits and gives you value and opportunity, because that's what we're all here for. So I'll
Awesome.
leave it at that.
Thank you, Jeff. Any final words?
Since you're going to fine all of them for going over 30 seconds, um,
Buy gold, sell crude.
There you go. There it is. I'm done. I didn't even have to say
Yeah,
it.
take it.
Uh,
All right.
no, for the most part, I think one area that and I don't want to open up another discussion here, but one area that I'm kind of interested in is the aerospace defense guys. I think they're gonna start getting a little toasty before long, if things work out the way they're supposed to. But I think it's something to kind of keep your eye on, and just kind of keep your eye on that area of the market. They've got
What are some
ETFs
of
and
those
stuff like
tickers
that.
you'd watch?
Pardon me?
What are some of those tickers you'd watch? Just so I can let the folks know.
Oh, well, of course, you got the NOCs, the LM, the Lockheed Martin, LMT, there it is. You also have Northrop Grumman. You have Raytheon, RTX. They changed that symbol. No, there's several of them out there that I just kind of watch on a daily basis just to kind of see what they're doing. And I think it is something to kind of keep your eye on and kind of watch for a while. I think they're going to start to kind of perk back up as they start, putting money, redistributing money or whatever through the Defense Department. And once they figure out where all the fraud is, get rid of that and poof, off they go. They still got to have, ships and bullets and all that good stuff. So I think they're going to end up doing pretty well, just especially if we start rebuilding our military and everything like that.
Jeff, what do you think about Enduro?
Ooh, you know what? I have not looked at them in ages. My goodness, you
No, no,
bring.
no, no. It's the private company
Well,
out
yeah,
of
I know.
Ohio.
I have not even thought of that company, and I don't know how. You always come up with these things, and I'm like, oh man, I never haven't thought about that in a long time. But yes, I remember the name, and man, I have to. I don't know what they even do anymore.
So
They're big on drones, drone defense.
drone
Yeah,
defense.
yeah,
And
I thought that's all they did, but I didn't know if they expanded out. They start buying people, and who knows what they do.
well, they opened up a huge plant in Ohio, I
Right.
believe, or that's where they're doing. But then the word, or I don't want to say the word on the street, but the kind of people are assuming they're going to go public soon, right?
Ah,
And two things. One, will that create an IPO boom? We saw Newsmax, we saw
yeah.
CRVW, Core Wave after a rough day or two make a big boom. But also less regulation in the FAA. So you have names like Archer Aviation, Joby Aviation, some of those, stocks that we've gotten, we'll just say hindered with regulation.
Right.
Maybe you start having some of those drones, aviation, because China is right now crushing us. I mean, some of their drone stuff is
Oh, yeah.
amazing.
It's incredible.
And I mean, you look at Saudi Arabia with they're getting all Chinese drones.
Yeah.
So I do think, I mean, this is stuff obviously in a bull market where is a little bit sexier and gets more hype, but something going forward.
Oh yeah, absolutely, absolutely. Yeah, I really like the drone technology, to be honest. I like it a whole lot. My brother, he's an electrical engineer. Actually, he worked for, he designed circuit boards for like F-18, F-16s, and F whatever planes all over the place. And he called me up, no, I don't know when it was. It was like in 2016, 2015. He goes, start building drones and sell them. I was like, what? You'll make a killing, just start making drones. And I was just like, well, I was like, I can design the things. I said, but I don't know the electronics behind them. He goes, I'll take care of that. And so we actually started building some drones and started just selling them. And it's done awesome. But I mean, now the drones these days are absolutely incredible. I mean, they even have, I don't even know if you can call it a drone, that people can ride in the drone kind of thing. I mean, they're just amazing what they
I think
can do with
that's
the
just an
power behind them.
airplane at that point.
What's that?
I think that's just an airplane at that point. I think
Yeah,
those.
exactly. Exactly. But you look at these things and they've got like, I don't know, 30 little drone looking things on top of them. They're up there just floating around. So, but it's pretty cool. So, but anyway, but outside of that, it was good seeing y'all. And Chris, always good to see you. You look great. And so,
Appreciate it, Jeff.
yeah.
All
So,
right.
but I will bug out and I will catch you all soon.
Thank you, Jeff. Let me throw to Kane here to round out the longest round of final thoughts. And
I'll keep it nice and short, and I won't just say that. So I would say the most important takeaway I would get from all of this is that people want to trade right now. They see things going on. They feel like they've lost some money or they've lost out on some opportunities, and they want to trade. And I get it. Traders trade, and you don't make money sitting on your hands. But sometimes that's the best thing to do. And if you must trade, trade in small size. I don't know how many times we said that, but it gets lost when we start talking about these opportunities and the view of the future and all of this. Trade in small size. How do you make it through this? How do you survive through this? How do you make money after this where you get the nice boom? It's to have cash available, capital available. Investment or institutions aren't putting cash to work right now. They're not. If they're going in small size, and that's what you should be doing as well.
Awesome.
Well
Thank you.
said, Kane.
A great parting word for us. All right. I really want to thank all you guys. I know this was thrown together kind of last minute, and you've given us almost 2 hours of your time. So I appreciate you. Everybody, thank these guys for their time. Ton of insights today. So appreciate you all being on here. Nate took a second to wave at everyone after being devoured by 7 kids. So again, yeah, thank you for doing this. You're free to head out. I'll wrap up for everybody, but we appreciate you being here always and appreciate your time. And who knows when we'll be doing one of these again with the way the markets are heading right now. So thanks everybody for being here. We really appreciate it. These roundtable sessions, we really want them to just be a hugely valuable opportunity for all of you. So we appreciate so many of you being here. And right now we're talking about doing the next one on tax day, April 15th, but that was true on Saturday too. And here we are. So maybe doing one of these again real soon if the markets continue to be crazy. But until then, thank you all for being here. Have a wonderful Monday evening and hopefully a good rest of the week in the markets. Thanks, everybody. See y'all.
See you, everybody.